Good morning. It is March the 20th, 2017. Time to kick off another trading day, another trading week, and as usual, not a lot of news coming into today's markets from over the weekend. Probably the biggest market impact we've seen in crude oil. So I don't know how things will shake out for us today, but it usually leads to a pretty calm Monday. We'll start with our disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, treasuries. Probably the biggest news event today is going to be the testimony of Comey on Capitol Hill about quote-unquote wiretapping, which is probably a misnomer. They don't have to go in, and back in the old days you had to get a court order and you had to go in and had all these people in the basement. You'd see them assembling and putting recorders on hard-wiring recorders into the circuitry. That doesn't happen today. It's a little more sophisticated than that. But wiretapping, especially in my generation, would probably be a term that would be pretty close to the tip of your tongue. So I think that's probably going to garner most of the news this morning. The selling in equities around the globe was attributed to G20s dropping the language about trade protectionism, and that's a pretty dangerous water to start treading in or start moving into, because best guess is about 30% of the world's GDP comes from trade. And if that is the case, you have to be really, really careful. Might cut your nose off in the process of trying to do what you think is the right thing to do. Countries are moving into bilateral trade agreements with the United States as opposed to the EU and the United States, or Southeastern Asian group with the United States. So that probably is the best way to handle it, and there's a lot of room that could be given by these countries that export to us and buy some from us. Usually there's a lot of strings attached on buying stuff from us, and the tariff side is higher on the other one. So hopefully some good, fair work that doesn't really destabilize everything will come of that. But that's the reason for the selling. So Japan, the EU, UK, and the E-mini are lower. Selling in treasuries started in London, so I don't know how deep or how far the selling will go. Usually Mondays we look for trading range. We don't have a lot of news to drive it. We have the Chicago National Activity Index today. Last month it was minus 0.05. Don't have any feel whatsoever about what it'll be this month. So right now we are pointed lower. We've got support at 16 to 20. So our first buy is 17 to 21. And second buy is 9 to 13. On the sell side, 25 to 29, sell 1. 31 to 03, sell 2. So I don't think that we're going to have much of a market today. That's usually the case on Mondays, but you never know. And if the E-mini actually starts to sell, the Treasury should be higher. We have two B's behind us and right here coming down. Have a move out of the middle. So we should be a little bit lower off of the profile, and then this high volume number here at 17 would be the attractor. And we also have structurally a high volume number at 19. So 17 to 19 would be the desired buy level. Okay, looking at the 30-year, the spread's the same. You can see right through here we probably have a pretty clean break at the 4 to 6 level. That's where we're holding up right now. So the buck to 4, number 1, 25.29 buy 1, and 13 to 17 buy 2. On the sell side right here, 12 to 16, number 1. So 19 to 23, sell 1. And we'll make 31 to 03, sell 2. Again, I think what happens in treasuries will be dependent upon the direction of the E-mini. For want of more news. And again, I don't... It'll be interesting. You know, right now, it looks like all this investigation and stuff about Trump is a complete fabrication, trying to taint his incoming administration and hamstring him. But we have all this news, all these leaks, all these specific quotes from different people. So somebody was listening in on somebody, and somebody ordered that. So it's kind of muddy, and it'll be interesting to see how Comey tap dances around that deal. Okay, gold is up. We've got P's behind us. There is the inflation story, and looks like inflation is starting to come back in the areas that the government's wanted. About 40% of people's net worth used to be in their houses before the previous administration, and the inflation in housing prices has been significant, not just in your Denvers and your San Franciscos and your big cities. So that's got to make the Fed happy. Our inflation numbers don't really emphasize food and gasoline and the rest of it, but they do have rent, and rent's a pretty big component. So right now, Europe is content that inflation is getting back to where they wanted it. It looks like the United States, the Fed, is pleased with where inflation is right now, where they want it, 1.5% to 2% per year. So that inflation component is a part of the strength of gold. The negative against gold is that the Fed raises interest rates, the world raises interest rates start to go higher. You can't eat gold. Gold doesn't earn anything. It sits there. You have to sell gold, and that makes it less attractive. So a couple of things going on in gold, which probably ultimately ends up with a trading range. London, the high was set in London at 35, so we have 34.36, sell 1, 39.41, sell 2. On the buy side, 25.27, buy 1, 20 to 22, buy 2. Well, yesterday it was 88 degrees here. It's supposed to be cool down today. It's going to be 86, and we're going to be, I think we go back into the high 50s for a couple of days, but that was pretty darn hot, based on what we've been going through, and it felt pretty good. It is early. Spring right here officially for us, just looking the way the plants are, is about 3 weeks early. I think it's probably the same for most places too. And okay, here is the euro, 108.25. So 15 to 25 is going to be sell 1. I don't think we'll get up there, but you never know. 40 to 50, sell 2. Okay, 75, 85, buy 1. Looks like the market's going to try to sell. And then 107.50, buy 2. And you know, in Trump's meeting with Merkel, they talked about bilateral trade negotiations and discussions. So I think Trump's not going to take on the whole EU or Asia, or it'll be country to country. And one of the things that has come out is that, but from Ross and Mnuchin and the rest of them, is that they'd like to make the North American, Mexico, United States, and Canada a economic powerhouse. So that would be would kind of mitigate some of the talk about a catastrophic deal with Mexico or Canada. I don't think that'll happen. I think actually what will be done will benefit all parties. But we're in the talk stage right now. We don't know what's coming out. Okay, crude oil. Every day we get articles about how OPEC is not going to be able to overcome the United States crude oil production, and that we're going to keep producing. And then you read articles about how it's economic at 35 to 40 bucks a barrel now for the shale oil production that's being brought online. So you never quite know what the costs are, but they wouldn't be drilling if they didn't think it was economic right now. So OPEC counters this by saying, yeah, well, we can roll production. We're flexible. That came from Saudi Arabia, their oil minister. So you got OPEC rhetorically and Russia trying to support the market right now. Russia is really, really feeling it. They've cut their defense budget by 25%, as is Saudi Arabia and the rest of them. Saudi Arabia is taking their treasury and selling that off to the tune of about $70 billion a year to support all their welfare programs to keep their population stable. So it is a real issue out there. I just know from my friends in the industry that like drilling offshore in the Gulf, if they could get it at 40 bucks a barrel, looked like it could bring it in at 40 bucks a barrel, they would do it. So it seems to me that around 40 bucks a barrel, there are still plays out there that are economic. And if that is the case, it's going to be very, very difficult to get the price of crude up back over 100 bucks a barrel where it was without war or something like that in the Middle East. Okay, so we're headed lower. We had a B on Friday. We've got a B overnight. We've got a B right now. So rejected prices may be below 47 and a quarter. Hard to say, but it looks like we are headed lower. So 48, 48 and a quarter, buy 1. 48.75, 49, sell 1. 49 and a quarter, 49.50, sell 2. And then 47.50, 47.75, buy 2. And we'll see how that plays. So why do we favor the short side of the market? Just looking at it structurally. Because we have selling behind us. It was very, very easy to see in the profile. I'm sure the Ichimoku would show that too. I'm sure your longer term moving averages would show that too. So you just have to pick out something that you've got confidence enough to be to trade. Confident enough to trade it. I think the easiest way to look at the market is through the profile. It's the cleanest. And it's the only one that combines time, price, and volume in one display. Okay, we definitely have a B. If we do an M split here, do a C split there, put all that together, we're dealing with B's behind us. And you can even see right here that the volume was tilted to the sell side. So we have been selling. You really wouldn't call that very much rejection. So that was the low of 51. So we've got this 65 area right here. Would be the first support. We've got an attractor or volume down here. We've got the low volume number at 64.50. So 65, 67 is buy 1. That's just leaning against support. And buy 2 would be 60 to 62. So 60, 65 is where I see support with no news. Got this high at 74.50. I've got that low at 73. I've got this high at 77.50. So 74, 76, sell 1. 79.81, sell 2. And that would pick up the start of the new distribution lower. There, Chicago National Activity Index should have no impact on the trading. So it's essentially a no news market. And the selling is attributed to G20. Where they dropped the trade protectionism language. And that's it. Okay, it's going to take a bit to get stuff up and posted. I'm going to get busy on that. I will be with you as soon as possible.